Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. It's been a mixed 24 hours as the Australian dollar briefly retreats from that top side of the range around 67 to 67.5, and from the current pullback the market has respected the support area seen around 66, 65. From there the market is now staging a small rebound and now looks towards our top side around 67.25 and maybe onto this objective which still holds at 68 cents. Technically, we're still holding above that midway point and the MACD is bullish, so I'd still feel that any pullback will be somewhat shallow and therefore eventually see that topside objective of 68 cents reached and then reassess. Looking at the euro, the market's been slightly whipsawed over the last few days as it respects the level around 105. Meanwhile, there has been much hawkish talk from the Fed officials overnight after St. Louis Federal Reserve President James Bullard hawkish comments dented recent optimism about the outlook for interest rates after saying that the US central bank still has a lot of work to do before it brings inflation under control and therefore has not yet reached a level that could be justified as significantly restrictive. And therefore, the market is still expecting to maybe see a rise between 5% and 7% in interest rates in order to squash inflation. That has reignited the US dollar. However, the euro is still holding steady. And the dollar didn't really gain that much, only up to around from 106 figure to 106.5. Still, the technicals are bullish for the euro and therefore at present could still reach its objective of 105 and reassess from there. With any pullback at present sees the support around 103.40 to 102.65. In light of the hawkish comments overnight, the market is finding a little bit more momentum in terms of dollar yen as it now looks towards that key level of 140.65. In light of the pattern, still be very much aware of this level as a break would see or give a measured move up to 143 to maybe 145. So it would be a bullish break of 140.65 that would ignite the bull run. But until then, let's see if the market respects this level as it has done at least on 4 occasions and may actually eventually see that move back to the objective that I'm still holding at 136.40.60. Sterling, the market is still contained by that 120 area, but still holding up relatively well in comparison with how some of the other markets are looking. The RSI is still relatively firm, and therefore any weakness likely to be shallow, and therefore looking away from the support level, seem roughly around 118.45, and maybe eventually reaching that objective of 120 and reassess, as a break above there would give further scope to 122. The overnight tumble for gold did reach its objective or support level and respected it at 1,756, but we haven't really backed away from that level and there's still further risk towards this support as the RSI is still weighing heavily on the midway point at 50. If we see a break here along with 1,756, this would give a measured move down to 1,746 to 1,726. But wait for the break, as if the market does respect this level like it did overnight, then we could still see a challenge back to that top side of the range, roughly around 1,784 to 88. And wrapping up with oil, the market crushed the level that is at $83.90, and from there took the tumble to close to 4% and reaches its objective somewhere around $81. In light of the pattern, we are trending from an ADX to the bear case, and the market is still somewhat heavy, and therefore could still see further risk of another slide that is towards 81.79 or down to $78 a barrel and reassess from there. Well, that wraps it for the week. Thank you very much for joining me. And as always, look out for the intraday report, and I hope you enjoy the great start to the new weekend.